system and how to Rose will be offering a boot camp starting next Thursday from 6 to 7 p.m., where we worked with them to help have them to come up with a 4-week boot camp where you're meeting once a week, and it's still structured on how GPI's program is structured, where you're setting up your QuickBooks account. You'll have homework assignments and lab assignments. But the goal is for you to get a good understanding of exactly what should go into your accounting system. We open this up to anybody because it applies across all businesses. So I would encourage you guys to jump in and at least get the basic and have your foundation set, because once it's set, you don't have to go back and revisit it. So I'm going to go ahead and hop into our webinar. So Tim, please introduce Rose Financial Solutions and give a little background on Rose and how long you've been playing in this space.
Of course. My name is Tim Fargo. I'm a partner with Rose Financial Solutions. I'm also one of the outsourced CFOs, and also work with and help manage our tax team. Rose Financial Solutions started in 1994 with Ted Rose. He actually coined the term accounting outsourcing. It used to be IT outsourcing, but he was one of the first ones to say, hey, businesses need accounting support and they may not have funding to help to hire a full-time accountant. And so back in 94, he had one of the first accounting clients and accounting outsources, and it's grown since then. In the early 2000s, we found, as we saw outsourcing was growing, we created automation around it and especially with the internet, to pull data back and forth so that the accounting could be done better remotely. And so we work with government contractors, we work with nonprofits and growing commercial firms. And we have a real specialized niche. We have a niche. We have a Rose community, which for those growing firms or the firms that are really looking for additional knowledge, we get them together and we build that community, as well as we help our clients grow. We've had clients who have started with just 1 or 2 individuals, and we had one who just sold for $40 or $50 million after a 4 or 5 year period. So our goal is, we are very happy when our clients leave because they've been able to sell their company. Because wow. I'll tell you 100% of the time, these are entrepreneurs and you're entrepreneurs. You'll start another company and you'll grow again. So it is an excitement for us. Oh, wow. We have clients all over the country, and we have different teams that work on government contracting, nonprofit, and commercial. So we have some specialties and subject matter experts in those areas.
Wow. So y'all definitely have been in the game for a while. And for me, from that first business, that was my biggest challenge, is really finding someone that understood really government accounting. So when you look at setting up your system to bid and compete on government contracts, as opposed to someone who's just doing accounting, what is the difference?
There's a huge difference. And that's why it's important to start early. When you're government, so just so everyone's aware, government contracting, you're a commercial firm. However, your biggest client is the government. So as the client of the government, they've come back and said, hey, to work with us, you need to do certain things. We're your clients, so we're going to require you to set up your accounting database so you can show us your direct costs, your indirect costs, what we say is allowable and unallowable, different pools. So if you have fringe pools and overhead pools, these are government terms that were created because you're dealing with the government. In a commercial firm, you may just have expenses, income and expenses. For a government client, you have to start to present them certain ways. And when you're smaller, you may not have as many pools. when you get larger, you may have multiple pools. I have a client who just got a $40 million contract over multiple years, and now they have a separate pool just for that overhead contract. So you start to customize different pieces as you grow. And so setting the system up in the very beginning helps you start to document and understand your government processes
and its policies. Because sometimes I give questions, especially those who are currently in business and their clients has been commercial based. So they're asking, well, do I need to set up a separate system for government accounting just for capturing that information? And I'm telling them, no, it's all one system. You can't have an accounting system for the commercial clients and the accounting system for the government clients. Can you explain why they can't have two accounting systems?
Wait a minute, say it again.
Going on.
So Paul, that was a great question. I'll repeat the question. So the question is, you're a commercial company and you want to get into the government space. Can I just use my same system for the government work and for my commercial work? And the answer is you have to use your same system for the government and commercial work, but you're going to have to customize your system for the government work. So it's important to understand what percentage you want for government work and how much that's going to impact your policies and procedures. And Paula, one of the things you just said was my overall system, which is your system is not just the accounting system. That's one small piece. It's your policies and procedures. It's your documentation. It's your interaction with the government and how you interact with them. They have specific rules in terms of ethics and conflict of interest. So you have to set up your policies and your system. And early back in the early 80s and 90s, before they had the computer, and I guess I'm dating my 70s, when you have your system, it's actually how you interact. Like you could have a very government compliant system, which is manually done on ledger paper. That's not done anymore, but you just have to follow those policies and procedures. Most accounting systems that are electronic take into account a lot of those policies and procedures, but it's important to get that policy set up first so you know you're in compliance.
And if I'm the owner of the business, and again, I'm a small business, maybe just 1 or 2 employees, do I need to have a timesheet to track my time in this space?
So that's a good question. So you're you should have timesheets to have a there's the Defense Contract Audit Agency, which is DCAA. They have a set of rules that say for you to and Federal Acquisition Regulation as well, who works with who has all the specific rules. The DCAA enforces it. They say you need to have and track the ultimate goal to the client, which is if you're going to bill that time to the government, then you need to have a time system that's compliant. So you should have a compliant time system. And when I say compliant time system, they have set specific rules on what the time system can do. You just can't go out and pick any time system because they want to make sure that the admin can't put time in and you can't go in and make changes. They have a whole set of compliance rules just around your time system. And do you need a time system? You can even have a 2 people. I often recommend, there are some that are $5 or $10 a month that you can have an electronic time system. You can even have Excel as your time system. You just have to track the time, have it reviewed, and that has to ultimately trace to your invoice, to the government and your contract.
And I think, and for me, when I won my first contract, they required that we get our system in compliance. And in order for NIH to approve our accounting system on that contract. And they encouraged us to go and strongly encouraged, they can't tell you what to do, but strongly encouraged us to go get Deltek. That was the worst nightmare in my life.
Yep.
One, because it cost me $17,000, and that was again 20 years ago. I don't know what it costs And you also had to pay $2,500 a quarter for technical support. Once I bought the software, my challenge began. It was finding someone who even understood Deltek. And it took me about 6 months to find someone that really understood how to implement that software. Hindsight, again, I could have stayed with my little QuickBooks or Peachtree at that time and still have the same result, because like, to me, an accounting system is only as good as the person who's keying in the information. Deltek, I think why the government like Deltek, you can't manipulate the data.
Yeah.
Whereas on QuickBooks, you have a little bit more leverage. So what has been your experience in working with those who are just starting out, and what type of systems should they be looking to grow into it? Again, when you start getting larger contracts, you definitely want to have that system in compliance and quality control procedures.
Yep. Paula, you're exactly right. And you fell into the sales trap of going with the big system first. And that usually there's a progression in your systems. And like I said, your overall policies align with your system. So if you're small and you're growing, there's a cost factor. What can I afford? And then B, what do I need to be in for compliance? So normally QuickBooks Online, QuickBooks, Procast, some of the smaller mid-sized systems are cost effective, and you can still accomplish the goal where you may need to integrate in a DCA compliant time system that's cost effective, and you can set it up. That you just need to put procedures in place. Like we, as an accounting outsourcing firm, we close the books for our clients. We make sure they prepare their indirect rates on a monthly basis, and we close the book. So that's one of the important pieces. You mentioned, what do you need to be in compliance? They have the DCAA and the FAR has a full list of things that you need to do to be in compliance. You need to have a policies and procedures manual. You need to set your accounting, the actual software system up so it can track direct and indirect expenses. You need to have a time system that tracks down to the project level. You need to be able to track unallowable expenses. You need to have ways to track the approval of the bills, invoices going in, and percentage of completion of those invoices in the contracts. Those can be done in the system. They can be done in conjunction with the system. There's a whole group of other rules that you have to be in for compliance, but you can maintain those. And as you grow, like CostPoint has some of these inherent to it, which means that your contract data is in there and it monitors things. But you can still do that with QuickBooks. You can still do that with Uninet and Procast. Those are things that you have to, you progress through your life cycle as you grow. So you maybe 0 to 2.5, 3 million, you're on QuickBooks and you have a set procedures in your compliance. And then you may go up, you may say, you know what, we want to have better project management, or we want to have automated calculations of rates where we can run them at any time. So then you may go to a Uninet or a CostPoint. And plus, if you have cost plus contracts, you have to really manage your indirect rates and the billing there. And so some of that's automated in the system.
Now you're talking above people's head.
Oh, sorry.
So let's break it back, go back down to exactly what indirect rates are. That's a broad
term. Sure.
For someone who have no clue what you mean with indirect rates.
Thank you for that. I do get a little technical, so thank you for bringing me back down. So when you have a contract, so say for instance, I get a contract next week, I got 2 people on site. I'm billing them, I'm paying them $60 an hour as an employee, and I bill them out for $60 an hour. Their actual labor is direct labor, which means they're directly working on the contract. Within that, I also have to pay for fringes, which is their benefits, their FICA taxes, their any other PTO that they take, that's an indirect expense. So a direct expense is the expense that costs directly onto a contract. It can be materials if you buy something directly for the contract. It can be labor. It can be subcontractors. Those are your direct expenses. Indirect expenses are items that support those direct expenses. There are fringe benefits, as we just talked about. It can be overhead if Paula's working on a contract, but she's not direct billable, but she has to project manage it, she's overhead to that contract. It can be G&A expenses, corporate expenses. If I have to do accounting and payroll and if I have to manage the company, that's a G&A expense. Those are all indirect expenses. Those get added on top of the direct expenses plus profit. Don't forget profit. And then you bill that to the client. That's how you calculate what you're billing to the client.
And that's why it's so important that you understand why your system needs to calculate that information so that right. You're accurately billing that client and not losing money,
right.
Or overbilling. So that's why I'm always emphasizing to these businesses, you've got to have an accounting system that's going to be in compliance and understand it.
And tracks it. Yep.
Yeah. I think one of the biggest mistakes I made, again, when I first started out, I was invoicing the government through an Excel spreadsheet. I had no accounting. And I submitted the invoice, and there was a formula wrong in my Excel spreadsheet. And the government thought they had $80,000 more than they had. And again, because of the grace of the 8A program, they gave me a little bit more leeway to clean up my system. So that's when I took off my accounting hat and turned it over to someone. Because on those invoices, the government's looking, especially the multi-year contracts, not those project-driven. They're looking for what you're currently billing for that month. What have you currently billed year to date?
Mm-hmm.
And then the total bill on that contract. And your system has to be able to capture all of that. And that's why I think Deltek makes sense, because Deltek will create those invoices that way. Do you agree?
Yeah, Deltek does make sense. Deltek is you can do that with multiple systems. Deltek is one of the systems, and Deltek does it automatically. It has cumulatives on there. You can set it. QuickBooks, you just created. You have to track it separately, but then put it on the system. Other systems, Procast, Uninet. I think there's a couple others that are out there. You want to make sure that you're tracking that data. That's your contract cumulative data and the invoicing data. And as you said, you want to make sure that you test it and reconcile it against the system, because that's one thing that they probably put a red flag next to you that said, well, we got to look at our system now, because they want to make sure that if they get a bill that it's been added and you're managing your contracts.
Mm-hmm.
You're right.
Okay.
I just that very good. So if you are starting out, how do you determine, again, I don't necessarily have enough revenue to actually have a salary, but how do you recommend people starting out being able to create a salary, and what makes sense?
So it is important, especially when you're starting out, to make sure that you're a business owner, and you need to, we talked about the indirect expenses. You're running that business. So one of your roles is a G&A person, general and administrative person, meaning you're running that business. So if you can't afford to pay yourself, payment is a cash mechanism, but that still doesn't mean you can't allocate costs or record a liability that the company owes you money. You're working for your company, so you can set yourself a salary, and you'll say, I'm supposed to get $5,000 a month, set that in as G&A expense, and then put a liabilities. The company owes this money. When we have cash, I can pay myself. So that way it can start to build up over time as you're building the company. Your indirect rates are correct. You're actually working for the company. It owes you money, but there's a salary in there. You don't want to come up with it should be a market level salary for what you're doing, so we can work through that. But that way, as you grow the company, you get reimbursed for the early building of the company, and your indirect rates are correct in terms of what you're spending the time, and the company's growing. And I've seen this many times, as you grow, you get that first contract, you start to build, you pay yourself back with the cash.
Great. That's great answers, because again, those are a lot of stumbling blocks people have at the beginning.
Yeah.
And don't even know that you can do that. And that's what I'm trying to tell the people coming through the program. Go ahead and set yourself a salary.
Right.
Where do you think, based on the number of years you guys have been working with small businesses, where do you think are the common challenges that you find working with companies?
I think common challenges are a few things. One is not setting the system up properly, meaning you just go in and QuickBooks is set up, and you just take whatever the generic chart of accounts is and start running transactions through there, and not understanding the structure. It's very easy, just an education on where it is if you know that you should be putting a holiday time to fringe benefits. As you start to grow, it becomes a systematic process. Whereas if you're just putting everything in one line, you have to go back and fix it later. It does cause issues, and you don't get good reporting. Second thing is understanding cash is king. So even though you're recording expenses, you really want to monitor your cash, understand when my cash is coming in, setting up and working on financing. There's different, you need to work and get a good trusted relationship with a bank and of course accounting firm, but a bank, so that the bank feels comfortable that you're lendable and you can work through. There's also factors too, but make sure you have enough financing, because you don't, the worst thing is you don't want to get a really good contract, a $2 million, $1 million a year contract right away, and you can't pay your employees, because the employees will stop working and then you lose the contract. So you want to make sure you have a good plan, and then you want to make sure you're managing your cash and understanding when your cash is coming in and going out.
That was my stress factor for sure.
It is, it's a majority of people's stress factor.
It was payroll. And
yeah.
That's why I tell people, you need to listen to people. If they're instructing you and telling you how to grow your business, be careful who's instructing you, because if they haven't had to meet a payroll, they have no idea of what it's like for you as a small business.
Yeah.
Payroll was and the industries.
Yeah.
So what I found in my business and what I saw going through the companies that I'd worked for, most of them, again, started out with event planning. And that was, again, my first contract was event planning. But the cash flow was a nightmare for me, because I had to put up a whole lot of money before I got paid.
Yep.
It was constantly juggling. So I started just looking at labor-based contracts. So I don't have to worry about how much money is this hotel, who do I have to reimburse. So I think people aren't aware of that when they jump into this space.
Right. One of the important things there is a lot of times you'll start out with a fixed price contract, because it's easier. You have a set amount, and then there are some depending on the agency, a lot of agencies have small business incentives, meaning if you're a small business, you go to the payables office and say, hey, we need to get paid faster, because we have to pay our employees and we're a small business, and they'll pay you within 10 to 15 days. Most people don't know that, and they wait the 30 to 45 days. But if you ask them, I haven't seen any that have been denied. Because you're a small growing business, the contracting officer wants to make sure you succeed. And if you're an 8A program, they really want to make sure you succeed, because they can't lose 8As. and so they will expedite payment for that, and that helps a lot in terms of both your stress level, but also you can make payroll. You get paid by the time you make payroll.
My experience also in that first business was initially I started out and I had payroll on the 1st and the 15th of the month. As I started growing, that's where my stress factor came in. And the other companies that I'd worked for, their payrolls were on the 10th and the 25th. And that made sense to me because what I was finding come the 1st every month, I'm having to process the invoices, praying and hoping that the previous month money came in to meet payroll. By pushing the payroll date to the 10th, it allowed me a little bit more breathing room. So do you have a typical payroll period that you find in this space for small business?
So it isn't important, and there's also one thing when we look at DCA compliance to try and have what's called a payroll lag. So if you pay people on the 1st, or if people are paid twice a month, they usually are paid and do their timesheets from the 1st through the 15th and the 16th through the 31st. And then you have a lag of 7 days where you can process payroll and then you pay them that 7-day lag. So they get paid on the 22nd and the 7th. That gives you both time to get the timesheets because it's important for timesheet purposes, but also it gives you time to collect more funds.
Wow, I didn't know that. That's why they had those dates set up that way. I didn't know that was part of the reg. So that's very information.
Yeah, it's very important too, because if you pay someone on the 15th and they haven't submitted their time yet, technically you're paying them for unsubmitted time. I mean, there are ways to work around it with policies where you have to go back and reconcile and say it's been submitted properly, but usually that's why you wait for the time frame for the lag, is to get all your timesheets in, they've been approved, and now you're paying for approved time. And then for cash flow purposes, again, for financing, it is important if you do have a line of credit for the company, you can start to build up credit, but you can even, for you, like you can borrow for a week for payroll. So then you don't have to worry as much. You know, you've got lending, you borrow to pay payroll, you get the money in a week later when you bill it, or a month later, but you're setting that up. You might have to pay some interest, but interest is a cost of doing business so that you can keep the company going. So that's where borrowing is not a bad thing. The goal is you pay it off each month. You don't want to have a consistent borrowing. You borrow it for a week or two, you get the money in, you pay it off, and then you do it next month. And then and it helps you grow with your line of credit will grow with your company.
A lot of times I got caught up in both. I had a loan, a 7J loan from SBA. At that time, it was the Express loan, $150,000. $150,000 to a small business is like $10. I learned that very quickly. Then I got tied into a factoring company. For those of you that don't know what factoring is, I call them check cashing stores for business.
Yeah, that's exactly what it is. You're exactly right.
And what I found, it was quick, easy money, but it was also expensive money. I was paying, the interest was low, but I was paying astronomical fees. If I borrowed off 100,000, they gave me 85,000 to go ahead up front and pay what I needed to pay. And they collected the remaining balance and they paid themselves 5,000. So it was a very expensive habit, but sometimes that's the only way that we tend to have to go as a small business. What would you recommend that small businesses do in the beginning to begin to start building relationships? And again, if we're providing them the tools and telling them to go out there and compete and they win these contracts, but they can't finance them, then we're setting them up for defeat. So what recommendations would you recommend to small businesses starting out?
So a few things first, team up with a good banker. Understand there are a lot of bankers who understand government contracting, and then the small business side of those banks. So I mean, we have relationships with Truist and PNC and Chase and a couple other they have small business arms that understand government contracting, and then work with them on getting a line of credit, even if it's $10, $20, $30,000. Once you get the line of credit, you can build it up based on your contract size, but getting that line of credit is the hardest. Second thing is, as you said, look for a small business loan. Look for one that, based on the size of the company, the small business will guarantee, SBA will guarantee that loan. That way it eliminates some of the credit risk the banks have. And then, as Paula said, it 150,000 is it looks like a large amount, but you can spend it very quickly. Make sure you know what you're going to do with that money. Make sure you don't just go spend it on pieces of business that may not be revenue generating or may not help support you in terms of your direct costs, because that's the whole purpose, is to help it grow. And then factoring is an option. It is expensive, but the one thing that factoring does that banks often don't do is they'll let you bill on your unbilled. So if I'm working from the 1st to the 15th, as soon as I have those timesheets done, I could borrow and create an unbilled bill, and they'll lend me on that money, which means that you lose some of your profit. Like you said, anywhere from 4 to 5% of that profit goes there, but you're able to grow the company if you're not credit worthy with a bank. A lot of times banks will say, we need you to have a year of experience, or we need you to have a little bit better payment credit history for the company. So they'll look at that. So a factoring is an option. And as Paul said, it is like check cashing, but it does give you the cash as long as you monitor it and you pay it back and make sure it's paid back. And then you have a plan to get over to a traditional interest-bearing bank and a line of credit over time. Like that shouldn't be your long-term growth pattern, but it will get you able to pay you and keep your contracts. So and make sure those funds are used for direct costs, and then that helps you grow the business.
And I do have a couple of 8A companies on the line.
Yeah.
If you're tying into factoring companies on those 8A awards, that still has to go through SBA for approval.
Yep.
Because what happens with factoring, the companies that are providing you finance, they're going to do what they call a novation, meaning they are taking over that contract. And the government's used to it, but you have to go through completing these forms and getting it approved. You cannot get into that relationship without SBA's approval if you're in the 8A program, because those contracts technically are SBA's. You're subcontracting to SBA.
Right. And the financing company, as Paula said, is novation, but they're buying the invoices from you, buying the contracts. And so the payments go to them and they give you the money after the fact. So and that's why it's a solution and a finance solution if you need the cash and you can't get it through a traditional bank, but there are a lot of hurdles you have to go through to get there. And it's also, and as Paula said, it's hard to get out of that because you have to have enough cash off. They're willing to move away from a factoring, but remember, they've bought these invoices. Now they have to collect all these invoices. So you have to bill future invoices, and they're still collecting the old ones. So you have a cash gap there. Yeah. So it does take some time you have to really structure how you get off of a factor.
I tell people it was almost like crack.
Yeah, no, I mean, I mean it's easy cash. You're exactly right, but it's not. You're giving your profit away, as Paula knows. That 5% could be all your profit, and so you're looking at it going, I'm working this hard, and all my money is going to the factor. But that's where you start to build a company, and you get experience. And they buy contracts and novate contracts, so you may have 2 or 3 contracts that are not on the factor. So that's how you really build out of it. You start to get other contracts and bring that cash in yourself until eventually you're strong enough you don't need that.
And I'm going to go back to the banks and the loans, and again, your accounting system.
Mhm.
My pet peeve is understanding, as I was saying in my promo, the profit and loss. Only thing I really understood about the profit and loss when I was trying to get loans and get finances was the negative. But also understanding when I started making money, it's like you don't ever feel like I made a profit. It's not in my hand. Can you kind of
Yep.
break that down? And like
I'll,
it's saying I'm owing, I made $20,000, but I don't really have that kind of $20,000 in my bank account. I'm still struggling.
yep.
It, can you kind of break that down into
I,
layman's language?
I will. I will. I'm going to use a term here that you may have heard of or not, but it's accrual-based accounting. So there's a cash basis and accrual basis. And as Paula said, let me give you an example. So if I work here in August, I have staff that work, and I bill out my work in September, and I collect my money on that bill in October. On an accrual basis, I record the revenue in August and I record the expense in August, because that shows my profitability for what I did for August. I don't have any cash in August. Cash is in October when I got the bill in. I paid my employees in August and September, so I have cash out, and then I have cash coming in October. But my profitability is what happened in August. So I could make money in August, but be cash negative in August, cash negative in September, and cash positive in October. So it's important to understand where you're, because if your profitability in August with what you build and what you paid out is negative, you're never going to recoup that cash because your accrual-based financials don't match and you're losing money. So you want to look at that and say, how did I do in August? And then I have to manage how I'm going to pay my employees and how I'm going to collect those invoices. So cash, yeah, and cash basis is totally different than accrual basis.
You really don't. I would say, again, my experience with small businesses, we're starting it on our skill set. And you really don't understand really how you're making money. We just come up with numbers and say, I'm going to charge this, or without having the insight of how the expenses are attached to whatever amount that you are charging. And it's the same thing with these government contracts. So is there the question I get the most is, if I'm starting out and I'm going for the low hanging fruit, that's what we encourage, those buys at 250,000.
Yep.
How much markup should I have? If it's just me, how much should I charge? Is there a formula that businesses should look at when they are starting out and competing on those low buys?
Mm-hmm. There is a formula, and it's called the wrap rate. So the formula is, here's what my direct cost is. And so it's important to put together a projection or a plan of what we think our expenses will be, and create that wrap rate. And it's called, a lot of times it's called forward pricing, or it's called your budget. But you want to put together, here's my direct rate.
What does wrap? Can you break down what does exactly?
Yep. So the wrap is it's your direct cost plus your indirect cost of fringes, overhead, G&A, plus your profit. All of that adds up to the wrap up to what you want to bill. So for an example, is I have my direct labor, I have my fringes, then I'll have my overhead cost of labor or direct overhead costs, facilities or rent, and then I'll have my G&A costs, and then I'll have my 5 to 8% profit, and then it wraps up. So wrap, maybe if you spend $1 of labor, your wrap may be $1.65, or starting out, it's usually $1.95 or $1.75. And that's, you bill that $1.75 on every dollar that you spend.
So do you still have to, if it's just me, I still need to be setting up that cost? If I don't have any overhead expenses technically, or fringe benefits, or any of those. It's just me.
You're still going to be, so if you're working, you're going to be the direct cost. So you might have the direct cost. If you're working 100% of the time, you might have direct cost of 90 because you still have to do the G&A. So you might have direct cost, and you'll have your taxes and your other fringe benefits. So you will always have fringe benefits. What that means is your RAP will be lower. So if you have employees with you, that's when you have to really look at what your RAP is included in your piece of it. I've seen RAPs for employees starting out anywhere from 1.45 to 1.9. All depends on what your underlying cost is. Somebody will get rent, and then they'll have a very small contract. They're only working 50% of the time. The rest of that time has to go towards your indirect costs.
But what if it's like a paint job, right? And I have a subcontractor. I've won, and the subcontractor's cost is going to cost $20,000.
Right.
So, how do I determine how I should bid that contract?
So what we want to look at is, like I said, we want to put together a budget, not just for this one, put together a budget of what is my normal indirect rates? What am I spending right now? I've got base expenses. On this situation, I don't have any fringes because they're a subcontractor. So, and I may not have any overhead. So I really just have, what are my G&A costs? So it may be, and I want profit. So it may be you mark it up by 7 or 10% or 12% on that. And that's your overall profit and indirect cost just to cover that one project. Now, if that was an employee, you'd want to mark them up plus the fringe expenses, which could be another 20 to 25% on that. So you want to make sure you're covering on everything you mark up. Don't just, I've had new clients come in and say, hey, I got a $20,000 contract. I marked it up 2% to cover my admin costs and I'm good. I'm like, okay, where's your profit? You don't need to mark it up any profit. You just took 2% to cover some small G&A, but you didn't actually make any money. So that's where you want to make sure and incorporate the company's profit as well as cover those costs. Because if you do that on the 2% and everyone likes it, guess what? You'll get a $2 million contract and they only expect a 2% markup, and you'll be losing money at that point.
What triggers an audit?
So what triggers an audit? So let's first define audit. An audit, there's a couple different types of audits. When we're talking about for government contractors, it could be an audit of your proposal. So you put a proposal in, and the contracting officer wants them to go in and audit the calculation of the proposal, how you came up with your numbers on that proposal. Another one is the audit of your accounting system. As Paula said, and I don't know if you're audited or not, but as Paula said, I send you the contracting officer an invoice and it doesn't add up. So they go back and they say, let's audit the accounting system to make sure that it's meeting the FAR compliance with, and they'll have DCA come in and they'll look at it and say, okay, when you create a timesheet, how does it get into the system? How does it create an invoice? How do you record that as payment? How does that get against a contract? They do testing of each one of those, and they make sure that you can properly bill and it's running through a system. So what triggers an audit is, it can be a couple things. One is they notice errors or they're concerned about the system that's set up. Another one is it has the potential to be a large contract. You may be on an IDIQ, or you may be on something that has potential for like a BPO that has large task orders, and they want to make sure you can handle a large contract. So they'll audit the system to make sure it can handle cost plus or fixed price or T&M contracts. Another one would be, there's been a complaint that something's happening between subcontractors and you're not paying your subcontractors, or you're not billing properly. And so they want to go in and they'll have an audit there. In most cases, it's the middle one. You'll see most of the audits are, hey, I want to award Paula a large contract. I want to make sure her system can handle it. And there's 3 different types of compliance that you can have for your system and DCA compliance. One is a self-certification. You submit a letter to the contracting officer, say, we meet this compliance. And you list all of the DCA audit rules and say, okay, my time system does this, my accounting system set up, I have my policy set up, and it's a self-certification. You sign it send it to the contracting officer. Then they have assurance that you're saying legally that your system meets the requirements. The second level is you hire a third-party firm, like we'll do this for some of our clients, is we'll go in and we'll do the testing like we were DCAA. We'll go in and we'll test each of the systems, make sure you're in compliance, make sure your policies, procedures match the compliance. You're training your staff on what's allowable and unallowable. And then we issue that letter that the DCAA would that says, you meet the compliance, here are the different areas that you meet, and you're in compliance. And then you can submit that to your contracting officer. A lot of times they'll take that, because if they do have to hire, and the third one is they have to hire DCAA to come out. The contracting officer has to pay for that. It costs them a substantial amount, $15,000, $20,000. So they may come back and say, if it's a large contract, of course, they're going to pay for it, and they'll have DCAA come out, and they do the same thing that firms like ours do, is they'll just test your system, they'll test your policies and procedures to make sure they're accurate.
Yeah, because often they'll have in the contract or require, are you DCAA compliant? So right. I had 2 experiences with that. Again, on the first contract, they required that our system became in compliance, and that's why I was in the 8A. So NIH came over and approved our system. Yep. And again, that allowed me to have the approval from the government to submit as part of my proposals. The second time is when I had to close the business, and they had to do what they called an incurred cost submission audit. Had no clue what that was. All I knew was the business is closed and you're coming to audit my books. Fortunately, it ended up being to my benefit because they ended up owing me money. Meaning, I had not billed them enough in that contract, and they paid me $85,000. So my goal is to make sure that you're not, that everybody understands it. Yep. They can go out there and win all these contracts, but if your accounting system is whack,
yeah, that would mess it up.
You're lost.
Yep.
I'm going to open it up for questions. Can
I answer one question just so you know? So an incurred cost submission is submitted when you have cost plus contracts. You have to actually submit every year of, I proposed 5% on my G&A. My actual G&A was 5.02%. Here's the incurred costs. And then the government's supposed to reimburse you that differential each year. And like you said, when you close out the contract, they'll do an audit of those indirect expenses. And if you have money left in the contract, or even if you submitted it, you're supposed to get paid for the overages.
And I also had one client, that was a nightmare for him while I was working at SBA, where the government at the end of the year came in and said, we have this $4 million contract. Do you have someone that can perform on it? Contacted the person. Yes, we do. I asked, is your system in compliance? Yes. And it was only for a year.
Oh, wow.
He arranged for the government to pay him every 2 weeks, which put him out of cycle.
Yep.
But it also triggered an audit. And when he came in and did the audit, he was billing subcontracting expenses. The government didn't even know he had a subcontractor, and the government stopped work on that contract. They would not pay him until his system was in compliance. So he ended up having to spend $30,000 to get his system in compliance, but at the same time, continue to pay the payroll. Otherwise, he was going to be in default. Yep. So that's why I will consistently say and preach the accounting part of it. So I am going to open it up to everyone. Anyone have any questions?
Ms. Paula, there was a couple of questions in the chat.
Okay.
The first question is, what is the cost for your firm to test an organization to run testing for system compliance?
Well, that's going to vary. So we'll put the contact information up at the end, and that should be a one-on-one. That's not necessarily going to be a one set price. It's based on each business. That's a case by case. So I answered that for you, Tim.
I was that's exactly what I was going to say.
All right, and then the next question is, what is DCA?
DCA.
Yep. DCA is the Defense Contract Audit Agency, and they are hired by the contracting officers, mainly from the Defense Department. So if any of your agents are under defense, as Paula said, she had NIH. NIH has their own auditors. Other agencies, NASA has their own auditors, but a majority of the defense contracts use DCAA for their auditors.
Right, great questions. Anybody else? Is this, y'all all done?
Oh.
Okay. Mm-hmm.
Do you think that it's feasible for us to actually, when we're starting out, to hire an accountant to do our books as opposed to attempting to do them ourselves, and we could get ourselves in trouble in the beginning?
So I can answer that one. As I always say, I'd love to hire the accountants. We can, as we have this training class, we can train you on what needs to happen within the QuickBooks, how to set it up, how to run the books. What we often find is, to be cost effective, we may have a combination of both. We may run your payroll, you may run the payroll or payables, and then someone helps close the books. It's important to make sure you're closing the books on a consistent basis, following the government DCA rule or the FAR rules, but it's based on cost and also to make sure that we have compliance. We have both. We would love to train you on how to do it yourself, and then eventually your time becomes more valuable, where the accounting can be outsourced and you can then focus on business development and growing the business.
And my thing is key and critical that you understand it. If you outsource it, and they come back and you don't know what you're reading or understanding what you're reading, you're behind the scene. My goal is to teach you at least the basics. We're not expecting anyone to be accountants, by no means. But in the end, when it comes to those audits and taxes or anything, it's still based on you. They're going to come after you. They're not necessarily the accounting. So you need to be in a position to understand what's going into that system and what you're reading.
Yeah.
Because,
and Paul is exactly right. I've heard this many times, and I've heard it from bankers, I've heard it from auditors. If you go in and interview the entrepreneur, the owner, and they don't understand the revenue and expenses, even at a high level, then they really, really get concerned. Because if you don't know the revenue and expenses and where you're going, and someone else is managing it, then it doesn't feel like you have control of the company.
mm-hmm.
So do you have a training program scheduled soon?
Yes. Yeah. Let me pull it right up. Great question.
Great question.
This is the class that will be starting next Thursday. Mm-hmm. It's once a week from 6 to 7 p.m. The link is on our website. We need to have at least a minimum of 15 people in order for this to be cost effective for rows.
Yep. And in this class, we'll help you set up your QuickBooks Online system, QuickBooks system, the chart of accounts, understand the indirect rates and how they're calculated, how to use the system as well, and there'll be exercises. So it'll be a combination of us training, but it'll also be interactive.
Mm-hmm. In the training course, I have a question. In the training course, this is Stacy Pulliam. In the training course, will you go over what you were talking about in the beginning of the class, how the contracts that you win have to be accounted for in the same system as any commercial business that you're doing as well? So
yes, we'll help you set up your system so that it can handle both the government contract and commercial. Okay. And an important piece of that question will be understanding to make sure you still want to maintain the same policies for the commercial. I'll give you a great example. You can't charge alcohol to the government contracts. You can't give gifts to government contracts. On the commercial side, you can do that. So we just have to make sure we set our policies and procedures up so that you feel comfortable. It's not going to impact your commercial business.
I love it.
And we will, that will be part of the course.
Okay. And this,
Thank
go ahead.
Yeah.
All right.
Hey, Paula. Paula,
Yes.
quick question. Would the QuickBooks be purchased? I know sometimes when people do things like this, they have a discount, or I'm assuming we would have to purchase QuickBooks in order to run it ourselves if we decide to go this route. Do they have like a discount, or is it something we just buy on our own? Like, how would that part work?
Tim?
We do have a discount if you want to go through our wholesale account. We can offer that. If you want to buy it on your own, you can do that as well. It depends on, we can offer a discount if you go through our wholesale account. Yes. We have had from our last session, a couple participants who did purchase it, and they're on our wholesale account, and you would still have to pay for it, but it would be at a lower price.
Okay, thank you.
And there's a specific version for government contractors. So don't go out and purchase it yet until we talk through, because the base version doesn't meet all the compliance. It has to be that middle or higher version. But we can talk through that on the course.
And it's not that expensive, is it?
No.
It's not that expensive.
Yeah, I think it's
Wow.
I think if you buy it, it's like $85 a month for the middle version. If we buy it, I think it's 50, I think something like that a month.
Oh, okay,
And
so
then-
it's a monthly fee. Okay.
Yeah, it's a monthly fee. And then if you add on payroll is a monthly fee as well through them.
Ms. Paula, I have a question.
Yes.
Okay, if we already have our own accountants, the class that he has, is he willing to help our accountants set it up? So
Of
that
course.
it's CPA?
Of
Okay.
course. We had I think 3 or 4 on our last class, and we still correspond with them with questions and everything else. Of course, we'd love to do that.
Perfect, thank you.
Yeah, a lot of accountants know commercial. They may not know government contracting, so it's we help guide them, and they understand the chart of accounts language, but they not just how to set them up.
Yeah, I believe my accountant may be on the line. Ruby, if you're here, do you have a question for the gentleman or Ms. Paula? I'm not sure if she's on. Okay, no worries. Thank you.
And that's why I do tell people getting into this space. I went through 6 accountants because it was just so hard finding someone that understood government accounting. And I was in DC. And you would think that would be a dime a dozen, but it was not. So that's when I found Rose and we came together. I was like, yes. That's exactly what we need. Because it's not just the accounting, it's the audits and all of it, the whole package of it. Someone that understands from the beginning to the end and willing to grow with us. So I appreciate this relationship, Tim, and
I do too, Paul.
Hopefully we'll get some people signed up for the class. They'll start next week.
Mm-hmm.
Well, we're signing up.
I have a question.
Perfect. Great.
Is the class cost? How much does it cost to sign up for the class or take the class?
$5.99.
How much?
$5.99.
Okay. So how do we sign up for it?
It's on the website. It's flashing. As soon as you go to the website, you'll see the link.
Thank you.
Okay.
The registration link is also in the chat, you guys.
How would you know?
Someone's got a question.
How would you know if your accountant was competent enough to do that?
Ask them if they know anything about indirect rates.
Yeah, indirect rates.
Indirect rates. Okay.
Yep.
Because you mentioned something about
and cost pools. Yeah, indirect rates and cost pools.
Indirect rates and cost pools. Okay.
Yep.
So those are government terms that a
They
normal
are.
accountant would not be working with. Okay.
Correct. And if they know, they'll tell you right away all the different pieces to it, how they do fringe rates, and they'll know right away. If they don't, then they'll be like, let me look it up. then you may have an issue there.
Okay, so give me those again, because I'm going to write it down. You said fringe rates.
Fringe rates, G&A rates, overhead rates.
Overhead rates and G&A rates.
Yep, you got it.
Okay.
And fringe, yeah. Yep, and then.
Got it. Okay.
This was excellent, don't you all?
Yeah.
You all?
Yes.
Yeah.
This was
Thank you,
great.
Mr. Fargo.
Of course. Thank you. I'm
Clap
excited.
it up for him, everybody.
Thank you so much. You've all been great. This is a good session.
All right. Well, we hope to see you all online with them on Thursday.
Yep.
Let's keep it going.
See you all on Thursday.
This is open to everyone, whether you taking the class or not taking the class. We just want people to get their accounting system right. So thank you guys for joining me today.
Thank you.
Have a great weekend.
Thank you, Paula.
Thank you.